Hello everyone. Please let me introduce myself. My name is Natalia Georgiou and I'm a junior legal specialist at Eltoma Corporate Services. Firstly, I would like to welcome you to our today's webinar on the company strike-off and liquidation. It's a really interesting topic as we'll have the opportunity today to examine the strike-off and liquidation process in jurisdiction of Cyprus, Singapore, and in tax havens such as BVI, Belize, and Seychelles. Any company, either incorporated in Singapore, in the Republic of Cyprus, or in tax haven jurisdictions, cannot be left abandoned, and if the owner does not want to retain the company, there are two options available to close down the company: strike-off procedure and liquidation procedure, which can be compulsory liquidation and voluntary liquidation. The strike-off procedure in Cyprus is a simplified method, and it's normally used for companies that have ceased their trading activities, have no assets, no obligations, and do not intend to carry on business in future. These companies usually referred to as dormant companies. A Singapore company may apply to ACRA to strike off its name off the register under Section 344 of the Companies Act. ACRA may approve the application if it has a reasonable cause to believe that the company is not carrying out business and the company is able to satisfy the criteria of striking off. Let's move on to Cyprus strike-off criteria. Firstly, the financial statements of the company must be prepared until the date of strike-off. Secondly, the company must be deregistered from VAT and obtain tax clearance certificate. After that, a formal letter signed by a director requesting for the company to be removed from the registry of companies, including a statement that the company has no liabilities, must be submitted to the registrar. Upon filing of such letter, the registrar will examine the application and if satisfied that the company is not indeed carrying out any business or an operation, the registrar will publish a notice in the official gazette with a view to striking the name of the company off the register. After 3 months from the date of the notice, the company will be struck off the register and then dissolved. It's interesting that whenever the Register of Companies has any reasonable grounds to believe that the company does not carry any activities, is entitled to send 2 letters to the said company in order to verify such information, and if the recipient fails to reply to the second letter within 1 month, the registrar will publish the said company in the official gazette in order for the company to be struck off. If the registrar does not receive any reply, it will proceed with the publishing and it will send a letter to the said company stating that within 3 months from the receipt of the letter, the company will be struck off unless there is a reason for the contrary. Failure to submit the annual return will result in the registration of the company from the register in accordance with the Article 327 of the Companies Act. Also, the Register of Companies has announced that it will send notifications to all companies that have not filed their annual returns, in other words, AG32 forms. It's also required by the law a Cyprus register in the Republic of Cyprus to submit to the Register of Companies the audited financial statements accompanied with the annual return once a year. The annual return shall be prepared within 14 days after the annual general meeting and within a time limit of 28 days from the date of its issuance must be submitted to the registrar. In effect, the annual return must be completed and filed with the registrar within a time limit of 42 days from the annual general meeting of the company. Additionally, the annual return must be submitted once a year, and this should be done within 15 months from the previous annual return without disregarding the calendar year. However, the first annual general meeting must be held within 18 months from incorporation date. All Cyprus companies have to pay the amount of €350 each year. Company law has been amended recently, and the levy of €350 is now payable by dormant companies as well. Any subsequent year, the levy must be paid no later than June 30th each relevant year. Regarding penalties, the law states that in case a company delays to pay the levy as stated above, but proceeded with the payment within 2 months from the due date, a penalty of 10% is imposed. And if the company proceeds with the payment within 5 months from the due date, an additional penalty of 30% is imposed. If a company does not comply with its obligations to pay the levy within 5 months from the due date, the registrar can remove its name from the register and deny the filing of documents or stop processing requests for the issue of certificates by the registry without any notification. However, if the company within the period of 2 years from the strike-off proceed with the payment of the amount of €500, or after the expiration of 2 years from the strike-off pay the amount of €750, company may be reinstated automatically and the Register of Companies will proceed with the correction on its records. If a company or any member or creditor of that company suffers by the company having been struck off the register, the court, on an application made before the expiration of 20 years from the publication in the Gazette of the notice for strike-off, if satisfied that the company was at the time of the striking off carrying out business, may order that the company is restored to the register and the company shall be deemed to have continued its existence as if its name had not been struck off. To sum up, a company may be struck off as follows: by decision of the company by following normal procedures, by the company's failure to submit annual returns, by the company's failures to pay annual levies, and in case the registrar has reasonable grounds to believe that the said company does not carry out any activities. Let's now move on to criteria for ACRA to consider approval of striking off a Singapore company. In order for ACRA to approve the striking off, company must have stopped business operations or has not started business operations since incorporation. Company must have no outstanding tax liabilities with IRAS, must have no outstanding employers' CPF contributions owed to Central Provident Fund Board, no debts owed to government agencies, no outstanding charges in company's charge register, no involvement in any court proceedings within or outside Singapore. No current or possible assets and liabilities, shall have the written consent of the majority of shareholders, which is necessary, and it is also essential for the company to prepare and submit the audited accounts made up to the date of business cessation indicated in the application. Below, we'll examine the relevant strike-off process for a Singapore company. The company director Corporate secretary or professional firm can submit an online application via BizFile to strike off the company. Upon submission of an application to strike off a company along with a declaration of strike off and tax clearance, as well as waiver of forms if necessary, ACRA will process the application and once approved will send a striking off letter to the company's registered office address, its officers at their residential address, and to IRAS. Any time after 1 month from the date of the striking off letter, if there is no objection, ACRA will publish the name of the company in the Government Gazette, and this is known as the first Gazette notification. After a 3-month period from the first Gazette notification, in the absence of any objection, ACRA will publish the name of the company in the Government Gazette again, and the name of the company will be struck off the register. The date that the company struck off will be stated. This is known as the final Gazette notification. The entire process will take at least 5 to 6 months. In Singapore, there is a principle that allows to any person interested to lodge an objection against the company via BizFile. If the interested person suspects that a company intends to apply for striking off, he may lodge a notice of intention to log objection to future striking off application. This notification is valid for 1 year. During the year, if the company submits an application for striking off, ACRA will notify the objector via email. To object to a striking off application, any interested person can submit lodgement of an objection against striking off, and ACRA will withhold the striking off and send a letter informing the company to clear the outstanding matter within 2 months from the date of the objection. If the company is able to resolve the matter within a 2-month period, the objector is required to lodge clearance of an objection to striking off via BizFile before ACRA can proceed with the striking off application. Although if the company is unable to resolve the matter within the 2-month period, the striking off application will lapse and revert to life. Then company will have to submit a fresh striking off application if it still wishes to be struck off the register. A company can write into ACRA to apply for the withdrawal of its obligation for striking off at least 5 working days before the company is scheduled to be struck off the register. The reasons for withdrawal should be clearly stated in the letter. After the company has been struck off, it can be restored within 6 years from the date of striking off. A court order is required. Upon receiving the court order, the notification of restoration of company that has been struck off, dissolved via BizFile, must be filed for this purpose. The Inland Revenue Authority of Singapore, IRAS, has the ability to object to a strike off. To avoid an IRAS objection, the company must ensure that it does not have any outstanding tax liabilities by doing the following: submitting all outstanding income tax returns, submitting all accounts and tax computations up to the date of businessization, ensuring there are no outstanding tax matters, cancelling goods and services tax registration and ensuring there is no outstanding matters. If the company never commenced business, or if the company hasn't engaged in any business since filing its last income tax return, then instead of filing an income tax return, it can file an application for a waiver of income tax return submission by a dormant company, along with a cover letter stating its intention to apply for strike-off. Is the strike-off procedure in tax haven similar to Cyprus and Singapore jurisdictions? Unlike Cyprus and Singapore jurisdictions, in tax havens such as Seychelles, British Virgin Islands, and Belize, The company is struck off automatically when the respective company fails to pay its annual renewal fee. The deadline for the annual renewal fee of each tax haven jurisdiction varies. However, all jurisdictions have also penalties if the license is not paid in due time. At this point, it's important that even though the company is struck off, any liabilities that it has are still pending. British Virgin Islands companies are separated in the companies of first semester and companies of second semester. First semester companies are companies that incorporated between January and June. These companies have to be renewed by the 31st day of May. If the renewal fee is not paid by the 1st of June, then 10% penalty will be imposed. If the renewal fee is not paid by the 1st of August, then 50% penalty will be imposed. If the renewal remains unpaid, then company will be struck off on the 1st of November. Second semester companies are companies incorporated between July and December. Second semester companies have to be renewed by the 30th day of November. If the renewal fee is not paid by the 1st day of December, 10% penalty will be imposed. If the renewal fee is still not paid, then 50% penalty will be imposed on the 1st day of February. If the company renewal is still not paid, the company will be struck off on the 1st day of May. Seychelles companies. Seychelles companies are also separated in the companies of first semester and companies of second semester. First semester companies are incorporated between January and June. These companies have to be renewed by the working day before date of incorporation. 10% penalty will be imposed on the date of incorporation, and 90 days after the due date, 50% penalty will be imposed. The company will be struck off on the 31st day of December of the same year. Second semester companies are companies incorporated between July and December. These companies have to be renewed by the working day before date of incorporation. 10% penalty will be imposed on the date of incorporation, and 90 days after the due date, 50% penalty will be imposed. The company will be struck off on the 31st day of December of the following year. Belize companies. Belize law amended in 2016, and all annual license fees are due on 2nd day of January each year. If a company fails to pay the annual license fee by the 31st day of July, a penalty of 50% will be imposed. If the company fails to pay the annual license fee by the 31st day of December, the company will be struck off automatically by the registrar. BVI companies can be restored within 7 years from the date of the strike-off. Seychelles and Belize companies can be restored within 3 years from the date of strike-off. Let's move on to liquidation of a Cyprus and Singapore company. The procedure of liquidation is quite the same in both jurisdictions. The main types identified are follows: compulsory winding up, also known as winding up by the court, voluntary winding up, which can be members' voluntary winding up, and creditors' voluntary winding up. A company may be wound up by a court order under certain circumstances. For example, the company is unable to pay its debts, which is the most common ground for compulsory winding up. The court may appoint a liquidator to wind up the affairs of the company. Where no liquidator is appointed by the court, the official receiver shall be the liquidator for the company. The liquidator will file necessary notifications required under the Companies Act. But what unable to pay its debts means in Cyprus? Under Cyprus law, a creditor whose claim has matured and remains unsettled can apply to the district court for an order that the company be liquidated. A key provision of the law is that a company is unable to pay its debt when the following provisions of the law may come to force. If a creditor for an amount over €5,000 has served the company by delivering it to its registered office with a notice of claim signed by the creditor or his advocates, which demands the payment of the amount owed, and for the following 3 weeks the company does not settle or reach an arrangement with the creditor in relation to debt, or if an execution or other proceedings undertaken by virtue of an order of the court is returned partly or completely unsatisfied, or if it's proven to the satisfaction of the court that the company is unable to settle its debts, and to determine this, the court will take into consideration the future and potential obligations of the company. Right to file petition has the company, a creditor, and the official receiver. Members' voluntary winding up. A company may be put into liquidation voluntarily at the instigation of its directors, and a member's voluntary winding up happens when the company is solvent, and in particular when the directors believe that the company is in a position to pay in full its debts and liabilities within 12 months after the commencement of the winding up by making a declaration of solvency in the form of an affidavit. The company will appoint a liquidator to wind up its affairs and file necessary notifications required under the Companies Act. The effect in either case is that the liquidator is appointed to bring the company's existence to an end so that it can be dissolved eventually. The catalyst of members' voluntary liquidation is a decision by the directors that the company has no further purpose and that available assets should be released and distributed to the shareholders. Creditors' voluntary winding up. In the absence of a declaration of solvency by the directors of a company, it may be decided to opt for a creditor's voluntary winding up if its directors believe that it cannot, by reason of its liabilities, continue its business. The company will appoint a liquidator or provisional liquidator to wind up its affairs and file necessary notifications required under the Companies Act. But what are the consequences of the winding up order? The winding up commences from the time the petition is filed. Any disposition of the company's property, including things in action, and any transfer of shares, alteration in the status of members of the company made after the winding up commences, shall be void unless the court states otherwise. Any proceedings against the company are automatically implemented or cannot commence the winding up order except with the leave granted by the court and on such terms that it may impose. The employment contracts or agency agreements come to an end. The directors are dismissed and their powers to act on behalf of the company cease. The liquidator takes into custody and control all the company's property and things in action of the company. Liquidator's rights. A liquidator can bring or defend any action or other procedure in the name of and or on behalf of the company. Is able to carry out the company's business so far as may be necessary for the beneficial winding up. Can appoint a solicitor to assist with the performance of his duties. Can pay any class of creditors in full. And can compromise with creditors. Liquidator's powers in compulsory liquidation. The liquidator can sell company property and things in action by public auction or private contract, can sign on behalf of the company any receipt and other documents, and to use the company seal for that purpose, to prove a debt or to claim against the estate of bankruptcy, can appoint a person to perform anything that he cannot perform, to do all such things necessary for the winding up the company and the distribution of its assets. In tax haven jurisdictions, there are several documents that need to be prepared and submitted at the registry as follows. Belize and Seychelles companies have to prepare and submit articles of dissolution, plan of dissolution, minutes of the meeting of the board of directors, declaration to IBC registry to liquidate and appointment of the liquidator, and statement of assets. BVI companies have to prepare and submit consent to act as the liquidator, declaration of solvency, notice of appointment, plan of dissolution, shareholders' resolution, board resolution, and statements of assets and liabilities. It's important that in tax haven jurisdiction, the company must pay its annual renewal if such becomes due before the registry will accept the liquidation. Liquidation becomes necessary for a client if he faces the possibility of future litigation or liabilities surrounding the business operations. If the client perceives that the nature of the business is such that future litigation liability is unlikely, then they may simply choose to have the company lapse, which is at no cost. Let's now move on at risk for a director in an abandoned company. The duties of a director under companies law and other legislations are not exhaustively codified because there's a combination of statutory duties, common law principles, and the duties contained in every company's articles of association. A director of a Cyprus company may be liable for prosecution by the Inland Revenue or Customs and Excise in respect of tax-related offences. The line between legitimate tax avoidance or mitigation and tax evasion is very thin. A director of a Cyprus company may be also liable for civil penalties and interest charges. Both the Inland Revenue and Customs and Excise have the power to prosecute and bring criminal proceedings against individuals involved in tax evasion, either personally or through their companies. Typically, the Inland Revenue and Customs and Excise will give the individual the opportunity to come clean, and provided that full disclosure is made, criminal prosecution is unusual, and the Inland Revenue will rely upon civil penalties. However, the Inland Revenue is much more inclined to bring criminal proceedings against a professional advisor who may be liable to a conspiracy-related charge if he helps his client to evade tax. The Cyprus Assessment and Collection of Taxes Law has been amended to provide enhanced tax collection tools for the newly formed tax department. law has been amended to render members of the board of directors of a legal entity criminally liable on their personal capacity for a legal entity's fraudulent or willful submission of tax returns, statements in connection with the entity's income, or any claims for allowance, deduction, or relief, incorrect accounts or information, documentation, or other related records and declarations. The liability is also extended to entities' executives, including the legal entity chief executive officer or any other executive with responsibilities as to the financial management of the legal entity, as well as any other person that is deemed to act in such capacity. Under the amendments, any person that omits or neglects to settle the tax withheld under the aforementioned is guilty of an offense in the event of an individual. The individual shall be liable to a monetary penalty of €5,000 and/or 2 years imprisonment. A company shall be liable to a monetary penalty of €5,000. In this case, and following the introduction of criminal liability for directors and other executives as described herein above, they too may be found liable for the omission or neglect, and as such be subject to 20% of the tax due and/or 2 years imprisonment in the event where the tax due exceeds amount of €1,700. For all remaining taxes, such as, for example, corporate income tax, an offense will be substantiated only if the omission, neglect is proven to be carried out fraudulently or willfully. The Department of Inland Revenue and the Department of Value-Added Tax have been merged into a single tax department in the context of public sector reform. The tax department will be led by the tax commissioner with the assistance of a maximum of 3 deputy commissioners, to which the various duties and responsibilities of the commission may be delegated. Singapore. The director of a Singapore company is responsible to keep proper accounting records that sufficiently explain the transactions and financial position of the company. The director is also responsible for to produce to the shareholders a profit and loss account and a balance sheet at least once every calendar year. This must be led before the company at its annual general meeting. Dormant companies and exempt private limited companies are exempted from preparing or filing audited accounts. In addition, below we may find all the rest of the director's responsibilities, which are tabling of accounts, balance sheet, and director's report at the annual general meeting, calling for annual and extraordinary general meetings and convening of meetings, complying with required procedures for reduction of share capital, ensuring registration of charges, obtaining approval of company for the disposal of company's undertakings or property, ensuring registration of certain resolution agreements, preparing and lodging the annual return with ACRA, ensuring the dividends are only paid out of profits, appointing the first auditors of the company. Taxpayers are required to make payment within a month from the date of notice of assessment is received to pay their taxes. When a payment is not made in due time, 5% penalty is imposed, and 1% penalty of every month the tax remains unpaid. If tax is still not paid, the taxpayer will have to deal with enforcement actions taken by IRAS. The taxpayer will receive demand note with imposition of penalty appointing banks associated with the company to pay taxes from the bank directly to IRAS. IRAS is entitled to take action to recover tax without any notice to the taxpayer. IRAS can appoint a bank, employer, tenant, or lawyer as an agent to pay the funds owed and/or travel restriction order and take legal action. IRAS can issue a directive to forbid the taxpayer from traveling outside Singapore. The travel restriction will be lifted by IRAS once tax is paid up. This is the end of our today's webinar. I hope you found our topic and presentation interesting and useful. All questions will be answered shortly after the end of this presentation. At this stage, I would like to inform you that Eltoma Corporate Services offers the following services: registration and maintenance of the companies in more than 35 jurisdictions, the creation and restructuring of the international holding structures, immigration services, accounting, audit, and preparation of the financial reporting, international tax planning, opening of corporate bank accounts, legal services, assistance in receiving licenses and registration of the trademarks, holding seminars and webinars. Here you may find our contact information. You may make any question at any time, and we will revert back to you with all relevant information as soon as possible. Thank you for all of your attention.